Hey guys, it's Jay from J&D's Retirement Journey. Hope everyone's doing well. Please hit that subscribe button. My goal is to get to 100 subscribers by the end of the year. And don't forget to hit that like button. Thanks so much. Hope everyone is doing well. This is Jay from J&D's Retirement Journey. I'm just going to go into a quick why I'm buying more of the XLF, the Financial Select Spider Fund. I already have 89 shares. I started buying it some years back. I'm up like $700, 32% in a few years. Now that the financials are getting hit after that bank collapse, it's at a great price. So how could you not want to get into financials? And I figured a way to diversify. I already have Bank of America and I have quite a few shares. I started reinvesting my dividend again in Bank of America. I wasn't reinvesting my dividend. I was buying other securities with that dividend, but now I started reinvesting since it's so low. Let's take a quick look at the XLF, the Spider Fund here. They closed almost at 32 on Friday, 4 on Thursday actually. Good Friday they did not trade. 4/5/2023. The 52-week range has been from 29 and change to 38. Looking at the 5-year chart, they're up $4 and change, almost 15% in 5 years. And the 1-year chart, it's in the toilet like most of the financials, down almost $6, 15%. They do pay a small dividend, which is great. Little bit over 2%, about 15 cents a share. Now we look at the top holdings in the fund, which is the big guys in the financial industry. You got Berkshire Hathaway, they own like 13%, JP Morgan, Visa, MasterCard, Bank of America, Wells Fargo, S&P Global, Morgan Stanley, Goldman Sachs, and BlackRock. These 10 companies make up about 54% of the holdings in this fund. They actually have 75 holdings. Morningstar has a 4-star overall rating, historic average return high, and risk is pretty much low. Let's take a quick look at the top 10 holdings of this EFT and how they're doing 5-year and 1 year, and what the analysts think and what type of dividends we're looking at here, if any. Berkshire Hathaway, it's at about 312 and change. The 52-week range, 260 to 354. We look at the 5-year chart. They're up almost 59%, $116. But of course, they're down $34 this year. Like all the financials are down 9.81%, 10%. But how could you go against Mr. Buffett? You know, this is just a minor downturn. We're going to see some stuff go up big time. The analysts are saying 3 hold, 1 outperform. Now we're going to shoot over to JP Morgan. They're at 127 and change as of 4/6, Thursday before Good Friday on the year 2023. Now we look at the 52-week range, 101 to 144. The 5-year chart up almost 16%, $17 and change. The 1-year chart down $3.62, 3%, which isn't too bad considering what's going on. They do pay a dividend. Berkshire does not pay a dividend. Their next dividend payment, it's $1. They pay $4 a year, which works out to a little bit over 3%, which is pretty good. Especially, you know, I love my dividends. I'm a dividend investor. Now we look over at the consensus, what the analysts are saying about JP Morgan. You got 8 holds, 14 outperforms, and 5 buys. Moving on to Visa. I closed at 226 on a 4/6/2023. The 52-week range is about 175 to 234. Looking at the 5-year chart, we're up 105, 87%, which is great. The 1-year chart, one of the bright spots this year, almost 10%. I'm sorry, almost $10, 10%. They do pay a dividend. We're looking at a small dividend. Less 0.8, not even 1%, 45 cents a quarter. Then we go over and see what the analysts are saying. They have an outperform on Visa, Reuters, 1 underperform, 4 holds, 23 outperforms, and 12 buys. We shoot over to MasterCard, the competitor here. They're at 361. Same day close, 4/6/2023, 52-week range, 277 to 390. The 5-year chart, $187 and 107%. Who could complain about those numbers? Looking at the 1-year chart, another bright spot, up $12, 3.5%. They do pay a dividend of $2.28 a year, works out to 0.63, 57 cents a quarter. The analysts are saying Reuters outperform, 4 holds, 26 outperforms, and 11 buys. So they do like this stock, just as they do like Visa. We're going to Bank of America Corp. I've had this stock for years. I bought in about 14. I made a lot of money. I sold some. I had 5,000 shares at one point years back. I sold it. I have a little less now. I'm still earning about $700 in dividends a quarter, which is great. But the stock is down, just like all the financials. It closed at almost 28 on 4/6/2023. We're looking at a 52-week range of 26 to 40. I've had it as high as like 54 a few years back, and I was making a ton of money. Now I'm making a few $1,000, which is not too much, but it'll come back. It's a great bank. I don't worry about this bank. The 5-year outlook here, the 5-year chart, it's almost 7% down, $2. The 1-year chart, we've been hammered this year. We sure have with Bank of America. It's down $11 and change, 29%. You would think it would be doing well with the interest rates going up, and they have like one of the largest deposit bases in all the banks in the world. So you would think they would do better. Let's see. If I know they're going to go up in the near future. They're going to keep going up. The stress test is right around the corner. They always raise their dividends after they pass the stress test. And hopefully once the stress test comes out, these banks will start running. Just a quick disclaimer here after I give you what the analysts are saying. Reuters has an outperform, 2 underperforms, 10 holds, 13 outperforms, and 2 buys. I'm not a financial planner, guys. Do your research before you invest in any type of security. Talk with your financial planner. All this information is right off the Charles Schwab website. Any financial website or broker you should be able to do your research and take a look at all these stocks and this EFT. Now we're looking at Wells Fargo. It's at 38 as of close of 4/6/2023. Their 52-week range, we're looking at 35 to 50. We're looking at the 5-year chart. It's down $13, almost 26%. The 1-year, not looking any better. It's down almost $10, 20%. They do pay a dividend, 30 cents a quarter, works out to a little bit over 3%. The analysts are saying Reuters again outperform, 7 holds, 13 outperforms, and 7 buys. S&P Global closed at 340 on 4/6/2023, a 52-week range of 279 of 416. The 5-year chart, wow, it's a good chart here, up $150, 79%. But we go right down the tubes this year, down $74, 18%. They do pay a dividend of 90 cents a quarter, works out to 360, a little bit over 1%. The analysts are saying Reuters and outperform, 15 outperforms by 6 buys. So they do like this stock. And we shoot over to Morgan Stanley, $84 as of 4/6/2023. Their 52-week range, 72 to 101. The 5-year chart, 59% up, $31, which is great. Oh, it's actually pretty much flat this year, which is good considering everything that's going on with the banking system and the financials. Upper dollar, a little bit over 1%. They do pay a dividend of 78 cents a quarter. Works close to 3.68%, a little bit over $3.10 a year. Now, the analysts are saying you got Reuters and outperform. You do have one sell, one underperform, 9 holds, 11 outperforms, and 5 buys. We shoot over to Goldman Sachs, 322 as of close 4/6/2023. The 52-week range, 278 to about 390. The 5-year chart, up $66, 26%. The 1-year chart, not too bad actually, up $8 and change, almost 3%. They do pay a dividend of $2.50 a quarter. Works out to $10 a year, a little bit over 3%, 3.1%. The analysts are saying Reuters and outperform, 1 underperform, 11 holds, 11 outperforms, and 5 buys. We shoot over to the last stock of this EFT, the last top 10 company, which is BlackRock. A price of $656 as of 4/6/2023. The 52-week range, 503 to 785. We're looking at a 1-year chart of 92.49. And the dividend, it does pay a dividend of $5, an annual dividend rate of $20, 3.05%. The analysts are saying you got outperform at Reuters, 5 holds, 7 outperforms, 4 buys. And again, guys, thanks for watching. Hope this info helped you out. Do your research, talk with your financial planner, and good luck. And let's see these banks go up in the near future. Thanks again.